Let's get into a quick discussion then about the market picture. Of course, as we usually do on a Friday, it's really been a topsy-turvy one. And this week has really seen the suffering of the local bourse and emerging markets themselves as well then, suffering at the hands of a possible recession, as well as we saw an inversion in bond yields out of the United States. Warwick Lucas from Galileo Capital joining us as usual on a Friday. Warwick, appreciate the time. If we quickly start off with the sentiment you've just heard there from Peter, it's really a difficult situation for the mining sector, which has really just fallen over the last 7 years as well.
Yeah, well, he's absolutely right, and he laid it out very bluntly. You know, there's simple choices here. You can either go for the higher wage rates and a contracting mining environment, a substantially contracting one, or we can look at an alternative model that at least increases employment. But the economics are the economics, and frankly, in the last 6 years, they've been absolutely abysmal. Yeah. And 1 year bounce does not make a renewed feast of pot of new money, I'm afraid.
Yeah, and I mean, the long-term perspective really doesn't look encouraging either. Where does one sort of look to now? And I just ask this as a general question, Warwick, because it seems that everything almost is capitulating. And even if you go into the likes of gold, it doesn't stand the long-term joy that perhaps some investors would like in there. Where do you look for yield at a time like this?
All right, so in South Africa, there's generally a relatively short list of, because of course there's so many terrible earnings reports coming out. I mean, the latest numbers that we've seen coming out are quite gruesome. So even if you have a good historic yield, actually holding it's another story. I mean, a good example that came out today of City Lodge. Now, I mean, that's a pretty stable company, very, very well managed, generally very solid business model. Earnings 20% down, and the hotel occupations generally give you a good insight as to what the business cycle and to some degree the manufacturing cycle is doing. And that was their occupations from 59% down to 55%. That's a big fall. Yeah. So it's telling us that this economy is battling.
The likes of Resilient as well, then how are they faring with regards to having them brought out their sense of earnings? Is the property sector still somewhat resilient?
I'm not seeing a lot of resilience in the share prices out there generally. I mean, if one, for example, looks at the landlord to government Delta Properties, I mean, that has been down from, say, R2 to R1.20 in the last few months. I mean, that's a pretty fearsome fall off, and they're not the only one by any means. Yeah. Most of the property companies are showing a little bit of stress.
Worried about the rand?
I think the rand, frankly, is elevated where it is. I suspect that it should give a little bit more ground, if only to give a bit of relief as well to the mining companies and manufacturers. Well, I mean, that's obviously that's a complete thumbs up.
That's a 14 rand question.
Let me put it another way. Globally, manufacturing is in a recessionary condition. It's to some degree what we actually want to see. Perhaps even more interesting to South Africans, rather than a cut in the Fed rates, is actually accommodative monetary policy in China, because that sector it's been under severe pressure. You can see it actually starting to come through, for example, in German economic data. I mean, Germany's biggest plank perhaps is their exports to China, and of course it's the first time in absolutely ages that we've seen a contraction in Germany. So that's something I think we in South Africa would dearly like to see come through, is a little bit of accommodation in China. And I think given the way in which they decided to let the renminbi go the last few days, perhaps more of that could be coming. Fingers crossed.
And I mean, they did note as well that the Chinese planning minister is sort of speaking just about how they might be able to support that economy by bringing some support to disposable income. So we'll see how that fares. Very quickly then as well, the U.S. Treasury yield sort of inverting this week as well. It was a big story with regards to pointing out a recession. Do you think a global recession is on the way?
Okay, so the one thing is to say about Treasury inversions is that they have a very good forecasting history of it.
Yes.
However, there always is a wrinkle to every story, and this time is no different. And the wrinkle this time is negative yields and quite fearsome deflation in Europe, which is really just spilling over into the States. So, I mean, effectively, you're seeing quite a lot of buying of those American treasuries coming from Europe. Yeah. I mean, an example of just how severe these negative yields are. I mean, all of your bonds in Switzerland out to 50 years are negative yielding.
Sure.
That means that you pay the Swiss government to lend them your money out to 50 years.
Jesus.
It is ridiculous.
Yeah, not helpful at all. Warwick, appreciate the time. Unfortunately, we are going to have to end it there, but thank you so much for that. Warwick Lucas from Galileo Capital there, helping us unpack that market picture for us. Now, the SABC News Channel crosses live now to the commemoration in Maracana